Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. This week I've also got 4 additional trade ideas for us to check out towards the end of the video, so definitely stay tuned for that. Now, I would fully admit that these are not the best trade ideas that I've ever presented on the channel. I'm not feeling 100% about them. I'm honestly not feeling 100% about the entire market as a whole right now. You'll get the sense of that as we go throughout the video today, but to make up for that, we will do a run-through of our core list of companies as well, okay? So if that all sounds good, let's jump right into it, starting off with the S&P sectors as we always do. Who was leading, who was losing, and where was the weight? The energy sector led the pack today, up 0.81%, whereas communications were down at the bottom of the barrel, down 0.7%. What I think is interesting, though, is that everything, as measured from today's open, was in fact green on the day, which is great. That's what you want to see as you get a green day in the S&P 500, of course, the conglomerate of all of our sectors. In terms of our heavier weighted sectors, the XLK, the tech sector, being the heaviest of them all, down 0.1 from the prior day's close, but up 0.58 from today's open. XLF sort of in the same boat, being nominally down, up from yesterday's close, only 0.07, but up 0.57 from today's open. Same thing with the XLV, 0.15 from the close, and from today's open, up 0.67. So let's check in on these sectors, though, and just make sure that risk isn't mounting in one place versus another. And again, you'll get the sense as we move through the sectors that I'm not feeling fantastic about the broad market right now. It's been an incredibly difficult week to trade. Notice that we have indecision and consolidation at the lows of the Friday breakdown candle. Remember that the weekly video from Sunday was labeled Friday Changed Everything. It's because we closed down underneath this pivot. We got acceptance underneath it on Monday. What happened on Tuesday? We gap up above, and now we have 2 days of back-to-back acceptance above. The market's all over the place. It's been incredibly choppy. You're not feeling alone if you've had a tough week out there. It's been a tough week, no doubt about it. And even inside of these days, it's been back and forth, back and forth, back and forth. No clear trend, okay? So you're not feeling alone if that's how you're feeling right now. In terms of how we're looking at this going forward, though, let's keep things, or at least try to keep things objective. We do have higher lows, right? That's a higher low from here to here. The next question is, can we make an equal high at minimum, if not a higher high, to start to solidify this as a short-term uptrend? If that can't happen, then we have nothing more than a compression of range, something that looks like this, and we would just be patient and wait for a break of either resistance trendline or support trendline to sort of kick off the next move in the market. So as of right now, because we're back above the pivot in a very choppy manner, don't get me wrong, but because we're back above that, we have to give a slight, very slight edge to the bulls here, but overall feeling a little bit more neutral about the market, right? I've been talking about this as well. If we think about this as a range, we're in the midpoint of the range, right? And usually your opportunity exists at the edges. This is a theory we talk about on the channel all the time. Shouldn't really come as a surprise to any of you longer-term viewers, but being in the middle here, it's been very choppy, and things are just exactly that, choppy, hard to read. In terms of direction, again, we're going to give a tiny edge to the bulls here, but overall, I would be more patient and wait for a better setup in tech as a whole, right? We're going to continue to monitor this as a sector and how it's impacting the S&P 500, and as of right now, I'm liking the higher low, but don't forget, we need to make the equal high. Otherwise, again, compression of range, it's going to be a waiting game, okay? So that's what I'm thinking about in the XLK. Let's move along here and talk about the XLF for financial sector. Of course, this chart is looking much better in my estimation, okay? So I feel a little bit more confident about the financials simply because we know we had the 100% retracement. Very rare that you take out the top on the first initial go, and right now we are starting to produce a higher low pullback. I love the fact that it's supporting at this prior congestion point and resistance here around the 39 quarter. We talked about that level, what felt like forever. Resistance here, now it's offering some support. I also like it in the sense that if we take out the Fibonacci's, it's not like it was an overdone pullback. If I do something like that, notice that it pulled back essentially right to the 38.2 in terms of the close. We respected the technical level on the low of day there, and now we're back above. So I like this pullback. It seems healthy to me so far in the XLF. We're going to monitor for an equal high up here, and then potentially a breakout after that coming from the higher low, right? So to me, XLF looking much cleaner than the XLK, and obviously interest rates have something to do with that, so let's go ahead and check in on that. And by the way, I should at least mention the downside, right? If we can't, escape this 2-day range to the upside for the equal high, just make sure that we hold on to 39 quarter as support below if the 2-day range breaks down, okay? That's as simple as that. If it's underneath 39 quarter, then this starts to become much choppier, and now I'm totally not happy about the sectors and the broad market as a whole, and I'm feeling much more indecisive, right? So that's how I would think about the XLF. Now let's get on over to that TNX, as I was mentioning. Of course, our 10-year treasury Zooming in on this one, let's first just point out that today was an FOMC meeting minutes release, and you guys were correct in the live stream. There was no press conference from JPOW. However, in the FOMC announcement sort of minutes, there were no surprises for the market, and that's why we got that little bit of a rally into the afternoon. There's not going to be some sort of massive rug pull where they say, you know what, there's going to be more rate hikes. We're going to wrap up the taper sooner than we thought. None of that happened, right? Everything is still on course for what the market expects, and that's why the market liked it and rallied into the close. In terms of the TNX, though, and the 10-year Treasury and what it's doing for our XLF, the financial sector, notice that as this is moving higher, the XLF is in that steady uptrend, nice healthy pullback over the past couple of days, but nice healthy uptrend, right? And the XLK is struggling, right? We've talked about this relationship in the past. I think the major damage has been done already to the XLK, sort of coming to terms with the higher interest rate environment for 2022. That sort of shock and awe has been digested, but as this continues to move higher, it's just not helping out the XLK, which is why we see such a choppy marketplace there. So that's my take, at least, on the TNX. If it continues to move higher, expect more chop, indecision in the XLK, and more of a cleaner trend in your financials, which, again, the financials alone aren't going to save the S&P 500, but it will certainly help it from preventing an all-out collapse. Okay, so that's my take here in the TNX. I'd love to hear what your take is down below in the comments section. If you're interested in sort of coming up with a different theory, or if you know something I don't know, I'd love to hear from you. Anyways, XLV, the healthcare sector, to round out the rest of our sectors here, much more middling, much more neutral, just like the XLK. Midpoint of the range, we're right at it. Okay, as of right now, we did technically have this level. It was the top of the range. We closed below on Monday, a little bit more concerning there. We had that follow through on Monday, but now 2 days back above. The interesting thing about this is that it's in no man's land, right? We're in between the balance from down here and the balance from up here. So patience, maybe we form an intermediate balance in here. I don't entirely know. I'm not feeling overly confident in direction in this one. In terms of keeping it objective, I would say, okay, yeah, we do have the higher low, but in here, we clearly have the lower high, right? It's not even like we have a set of equal highs after the balance as we saw in the XLK, right? That would have looked something like this for equal highs there. It's just a clear lower high, right? So to me, not really looking fantastic in the XLV. Direction doesn't really strike me as being clear here. If there's any takeaway, maybe now is just not the time to really be pushing it out there in the marketplace. Wait for some more clean direction to essentially develop. Let's continue along here and talk about the VIX for our volatility index, okay? And if we zoom in, clearly, this thing went bonkers as we had the Ukraine-Russia tensions, and it's subsiding a little bit, right? I still want to point out we're well above 2050. There's a lot of volatility in the marketplace. We just went through an earnings season, so things have been kind of crazy out there. Volatility seems high, but the compression of range, at least in the S&P 500, seems really tight to me. So I'm not entirely sure what's going on, if there are things happening behind the scenes that are even outside of my own knowledge base, in terms of volatility skew, and I'm not an expert in that. I'm not going to pretend to be one. But the fact that this is so high and we're still seeing compression of range in the S&P 500, like we saw back-to-back days with value unchanged, it's not quite adding up in my estimation. So again, I will fully be humble when I don't really know exactly what's going on. If you know what's going on with volatility, why it's still so elevated, but the S&Ps are going nowhere, I'd love to hear from you in the comments section, right? Today's video is sort of all about my uncertainty with the marketplace. This is just another one of those pieces of the puzzle, cementing that idea to me. Like, things aren't adding up in my estimation. So I'm definitely taking it easy this week, not really pushing my luck. And if you've been tuning into the live streams in the morning, you definitely got the sense of that in this morning stream, especially with the uncertainty of the FOMC. So enough sort of ranting about the unknown here. VIX, it's not telling us a whole lot in terms of actionable items into the remainder of the week. So let's move on, right? Let's go ahead and take a look at our S&P 500. We'll talk about levels. This is the bread and butter stuff, where the rubber hits the road. It's either you break the level or you don't, right? So we had that day of acceptance underneath on Monday. Looked more bearish than bullish. The fact that we now have 2 days of acceptance above strikes me as being slightly more bullish. Again, just like in the XLK, I don't want to be overly aggressive to the upside, but we do have to give a slight edge to the bulls being back above this pivot and the low end of the consolidation from in here. In terms of today's session, sure, we had the FOMC volatility, but think about what today's range was, right? Today is an engulfing bar of the prior bar. We have a low that is lower and a high that is higher. So if the sellers were going to make their stand, they should have filled the gap all the way today. Didn't happen. We also closed at the highs and took out the prior day's high, a sign of strength from the buyers. So again, slight edge here to the buyers, but overall, if I just draw back in that box, where are we in the overall range? Maybe a little bit higher than halfway, but we're sort of in no-fly zone. We know that the bigger breakout's going to happen here, or the bigger breakdown is going to happen in here. Until that happens, I would say the conservative trade is just to be exactly that, more conservative in the market, not be looking for massive moves, and maybe even size down as we navigate this chop. To the upside, our target has to be the top end of that range, and the scene of the crime from where this breakdown on Friday stemmed from, around 451.83. That's the upside target. If we take out today's high, boom, you have that. And then, of course, the equal highs we discussed in the XLK, very similar here in the S&P 500. And if we can crack that, that's where we start to get a little bit more comfortable with the bullish sort of slant back in the marketplace, noting that we would firmly be taking out any sort of resistance trend line that would be in play. We would have a support trend line we could then use. It would be much better, right, in terms of deciding direction at least. And again, as traders, we can go either way. It doesn't matter, but we just have chop right now. It's very, very hard to determine what direction the market wants to go here. But for some of the reasons we've outlined so far, we're leaning a little bit more bullish than bearish, but overall feeling slightly more neutral about the overall marketplace, okay? So that's what we've got to the upside. To the downside, obviously, it's all about an equal low potentially at the 437. Thing of beauty that it held up in here. Just as a reminder, let me go to a 30-minute chart here so you can see this. Here we go. Reminder where that level was coming from. It was the breakout from here. The fact that that held on Monday, that to me was like an extremely nuanced level that was like, okay, maybe there's something to this marketplace, but even still, choppy. Look at the activity. And again, this goes to exactly what I was talking about in the VIX. Notice that this is like, a tiny, tiny range here in the S&P 500. And a VIX north of 2050, I would expect this like every single day, right? So that's not happening. Something's not adding up here. I'm just being more conservative into the remainder of the week until we have breaks or cleaner setups that occur out there in the marketplace. So let's go back to the internals. We're actually not going back. We're moving forward here. If you're not familiar with this screen, get familiar. Top right-hand corner is going to tell you what this all is, how you can set it up, and how it'll help you make better intraday trading decisions. Notice that this is fairly split as well, right? If you look at the net effect of Monday and Tuesday, they cancel each other out. Wednesday, flat. Right? A little bit of volatility here in the FOMC with a move higher. Same thing with the advanced decliners being negative on Monday. Tuesday, nice up in trend zone. That's a good thing. That is a little bit of confirmation that the buyers were stepping up there on the Tuesday session with that gap up and hold. But nonetheless, on today's session with the FOMC, as we're hovering in this range still, really neutral. Same thing happens with your cumulative tick, right? These two sort of cancel each other out, especially in a sideways marketplace. You're not going to read into it too much. And then here on today's session, of course, hanging in limbo until the FOMC comes out. So another layer of the cake here supporting the theory that, I don't really even know what's going on out there right now. It's incredibly choppy. I think patience is the play. As simple as, as sort of uninteresting as that sounds, I think that's the move right now until we have a cleaner setup that's presenting itself on the SPY daily in terms of the internals, what the sectors are telling us. That's as simple as it's got to be here, at least in my perspective, okay? So here we are over on the market profile now. If you're not familiar with this, I've got another video for you. Top right-hand corner will describe what this is and some of the terms I'm about to use. What I think is interesting here, let me scrunch this up just a little bit. Here we go. Is the fact that, so on Friday, right, we have this double distribution. We accept in the lower distribution on Monday, and now we're accepting in the mid-range, not even into the upper distribution of Friday, okay? So to me, that's a little bit more telling in the sense that it's not, and again, this is another conflicting data point. There's tons of conflicting evidence out there. If this was a more aggressive market, we should have easily been accepting closer up here, north of 4,500. Why is that? Well, pretend that this point of control down here, the yellow line, was in the upper distribution as well. Point of control there would have been way up here, north of 4,500. And the fact that we can't do that, and we're just getting this sort of balance down here, this is sort of the FOMC nonsense that occurred. It just doesn't strike me as an overly convicted market for one direction versus another. Even look at where today's point of control was, right? They left it lower on the profile. So does that mean that people were accumulating down here looking for the pop higher? Maybe. I'm just not overly convinced, though. It just, as of right now, patience it's got to be the play right now, at least for me. That's how I'm feeling. If you're feeling more aggressive, if you see any clean setups, don't let me be the one to rain on your parade. If you've found something that's working for you, I'm just voicing how I'm feeling about the market right now, okay? So let's move back on over to the platform and round out our broad market with the QQQ. Zooming in on this, again, just like the XLK, back above the pivot point here, giving a micro edge to the bulls because of that. Again, same sort of idea as well with the outside day on today's session as in the S&Ps. If the sellers were going to materialize, should have been under yesterday's low, did not happen, closed back above strong inside here. And by strong, I just mean at the highs of day, right? I don't mean that we closed at the top end, obviously, and there's, no indication that this is overly bullish or bearish, but we did close closer to the high of day. So again, if we can take out these 2-day highs, rotations here to 362. After that, you're looking for sort of this area, roughly 369. 369 is really the number to beat. We did technically set a lower high off the daily 200 SMA, but if we can reattempt this off of the higher low after a failed attempt from the sellers under the range here and here, I would, here's the deal, right? I would need to see the buyers prove themselves and at least make it to 369. If we only come up for an equal high here, I'm going to start to say, okay, neutral, choppy, maybe even slight edge to the bears if the buyers can't even make it to that critical area, 369. So that's one way to think of it as well. To the downside, if we roll over, which again wouldn't be suggested based on how we've closed so far, but falling underneath this gap area, basically right around here, today's low of day, breaks the support trend line, equal lows, it's got to be closer to 345, okay? So again, still fairly choppy. I'm sure you can get the sense, if you haven't tuned out already, in my voice and from how I'm feeling about the market. I don't know. Your guess is as good as mine right now in terms of this marketplace. Let's continue along and talk about the IWM for small caps. And this one still best illustrated on the weekly time frame chart, just so we can see the range. Here it is. A little bit of a back test, right? And as of right now, we haven't fully resolved that 208. We're certainly trying to, but we haven't resolved it, okay? So I wouldn't be overly aggressive here yet to the upside. And to the downside, start to be a little bit more cautious. We already talked about this look above and fail. Now that we've creeped up, we've taken out that Friday high. I don't know. I'm not overly convinced either that it's got to be lower for the full rotation to the bottom end of the range here at 191. So patience is still the move. I've got to give them a little bit of credit for getting back above that 202.79, but we're still not above the 208. In here, I think we just get exactly that. Continued chop, no man's land. Firmer direction would be sort of considered if we can get into the 208 and potentially break the resistance trend line on the daily, right? That to me would be a fully or a more confident sign of strength from the buyers. As of right now, chopping around in here, I'm not seeing it clearly. Let's get into these. Well, first, let's do the core list of companies. Then we'll get into the trade ideas, the 4 additional ones. So zooming into Apple. This one, a little bit better of a setup than what we've seen across the broad marketplace. We know Apple is a relative strength monster. If we look at this as an overall range, this technically is look below and fail. We had the 168 opening below. We closed above, recaptured it. Then you have a micro look below and fail, right? You have this look below and fail back into the range. If we take out the 2-day highs, target has to be the top end around 177 in Apple. So this setup here is probably something I'll watch into the end of the week as opposed to trying to guess the direction of an index, which as we've experienced so far in today's video, is a little bit more choppy. Okay, so this I'm liking here on the look below and fail on the micro time frame. Target, as we mentioned, 177.05. If we roll over here, 168 has to hold. If it breaks, then we have a lower high attempting an equal low. Probably goes lower into that 164 quarter. Again, slight edge to the bulls based on everything we've discussed so far. Netflix, not a whole lot going on here other than the little balance area that we've put in so far. Let me zoom in on this so we can actually just see the price. This is horrendous. Let me adjust this manually, I suppose, with the hand tool. And it'll look a little bit better. So apologies, bear with me as we sort of adjust. There we go. Hammer candle on today's session. We did explore lower underneath the bottom end of balance, which is not ideal. So start to treat this as an area of breakout, okay? I wouldn't be going long inside the balance looking for the top end. I would be patient and wait for the break of the top, especially because we've experienced chop in this overall area. And that just aligns with everything we've talked about so far. But because we have the hammer, maybe there's a response from the buyers into tomorrow. I would be patient for the long up and over 412 in Netflix. Tesla is up next, and this one is this is the one to probably be watching for the larger break of the 2-day range. So you get 2-day highs breaking into 943. And then from there, it's 1,000, right? We've talked about that in the past. We talk about it on the secondary channel. We've talked about it for nearly weeks as we've been consolidating here. But nonetheless, this is still the attractive breakout point. Nothing about that has changed. Look below and fail. As we know, the target should be the top end, which is why I was discussing 943. But from there, the larger trade really develops into 1,000. So that's still certainly on our radar on Tesla here. Next up, we have Alibaba. Nothing really going on other than potentially range compression. You can see that we have an ascending trend line and then sort of flat highs here. So if we can take out the top, resistance trend line is your target, also that 140-ish area, 139, and it's stemming from a break of 130. So that's probably the trade I would watch for in Alibaba. If it breaks the support trend line, maybe there's a move underneath the 122 into roughly 115.84 coming from. You can see how it's respected some of these areas in the past. Nearly all of these candles are the same width of our ranges, so maybe that's a setup to the downside, but I probably wouldn't push it that way. I would wait to see, can we get something like that, given the fact that it's hanging out in the top end of the ascending triangle. Next up, we have Facebook. A little bit of a conundrum this morning with what was going on with I believe it was Google and their sort of restriction. I don't know if it's Google's restrictions. It had something to do with tracking. Something with Google, okay? Nonetheless, Facebook underneath the lows of the potentially double bottom pattern. So that's no longer really on the table. But we are, filling the gap, closing right at those lows again. So just be on the lookout for acceptance in here. And then a break of the 2-day highs is probably the trade to be looking for. I'm not saying it makes it all the way to the old neckline of the double bottom from here, but that's really all we have for structure, unless you're looking at a smaller time frame chart. So from the daily, maybe think of it as a look below and fail, and then you rotate higher. I'm not entirely convinced. I would be patient here, probably scalping only, so like really short duration trades up and over that 221.28, okay? To the downside, 207 still strong support, which we have not tested yet. NVIDIA earnings, okay? So these guys are reporting earnings literally right now as I'm doing the video. Let me zoom into the daily first, then we'll take a look at the after hours session here. Nice resistance trend line, push right into it, hammer on today's session. We talked about this in the pre-market live stream. The expected move was about $20 because we were at 265 when we were doing that. We were saying 285 may be a contender, and in the post-market right now, we are 263. So it actually looks like prices have not moved one bit, okay? Let's actually take a look here just for the sake of curiosity. Zooming in. Volatility. Okay, so here we go. If this ties back to the VIX and the fact that the VIX is elevated, this is great proof of that. Look at where your high and where your low are, and the fact that we've seen nothing but volatility and not a whole lot of direction. We're still inside of the day's range as of right now. Into tomorrow's session, just be aware of where the high is and where the low is of the overnight session. A lot's going to happen between now and 9:30, I would imagine, so just adjust the chart accordingly. It wouldn't really make sense too much for me to be giving you, defined setups based on what was happening in the post-market as of right now. Okay, so zooming back into the daily, in terms of levels, we talked about the upside, 287. That's probably your expected move target. To the downside, critical support has to be here, 240. Notice that's a flush point. All of these price interactions, if that breaks, the obvious target is the unfilled gap underneath and the daily 200 SMA sitting at roughly 228. Okay, that's what we've got to the downside in NVIDIA. Microsoft up next. Zooming in on this one, there we go. 300 continues to be a thorn in the side of Microsoft. If we can accept above, it's the resistance trend line. If we cannot, we have nothing more than a break, retest, rollover, and you would flush now the 293.50s. That did act as support on today's session, but if we retest it after a failure of 300, then I would expect lower, just for trend continuation to the downside. Our next target is 285.25. Last but not least, we have Amazon, the beast here, just sort of chopping around, still more of an indecisive name right now. You can see that we have a day down, a day up, a day down, a day up. This is not something that would be interesting, to me at least, to be trading. Maybe if we get a firmer recapture of the 31.76, we rotate to these highs. But unless that actually happens, I would just expect more chop in here. And, we would need to wait for some other setup that potentially presents itself. I'm not seeing it in Amazon right now, okay? Again, that's been the theme of today's video. If you've stuck with me this far, then one, I thank you. And two, maybe you're seeing it in the same light as me, and, we're in the same boat here. So let's get into these trade ideas now, the 4 additional ones. The video is going to be extremely long. Today feels more like a rant than a productive video, but nonetheless, this is how it goes sometimes. First one's on AT&T. Bear flag, okay? Something that looks like this. Big flush point underneath, if we throw that level on there, 23.78. And if it breaks, look left, we have pretty poor structure. I would expect to move into the double bottom lows here, closer to 22.20. Okay, so bearish trade idea here in AT&T. If you want to use a resistance trend line to keep you in the game as well, as long as we're underneath that, continue to be bearish. If we take it out, it's got to be these swing highs up around 25.50. Based on the pattern, I wouldn't really expect a break to the upside. Next up, we have SQ. And this, of course, is for old square, which is now block. And the trade here is just compression of range, right? All of these inside bars, stacking, stacking, stacking. We're in an overall daily downtrend. I would start looking for the flush to here, the big lows around 102.20. And if that breaks, we know that there's not a whole lot underneath us until we get to 84.27. You can see that in the bottom right-hand corner of the screen, but on a 2-year, you can see where that's coming from. Let's actually grab 3 years just so I can sort of illustrate that off to the left here. doing something like that, that 84 level that we discussed, it's the highs from right around in there. So that's the next major area of support here inside of block if we get that downside move off of the inside bar setups that we were seeing on the daily time frame, right? So all of this is just a lack of the buyers getting it up and over the resistance trend line, equal lows in here, sets up the flush point, right? So that's SQ in a nutshell. Let's continue along. Next one is on BA, Boeing Airlines. And what we have here is just a resistance trend line in play. So let me actually draw that in, coming from here, something like that. If we zoom in, we're pushing into it on a higher low. So there's potential for it to break here actually because of the higher low. In the FOMC report, there was a lot of talk about increased spending in travel and leisure, okay? So because of that, Boeing is going to benefit being an airline maker. So if we can take that out to the upside, first target's at 225 roughly. If we take out the 2-day highs, more conservative traders just waiting for a break of the resistance trend line, then the next major target is here from the prior swing. Okay, so if I do something like this, oops, we got to get the other tool, that would help. You can tell it's a long video today. So there's the other tool, 233, next target on a break of the resistance trend line, one step at a time here. Don't push your luck. This one is in a fairly, not aggressive, but definitely sustained downward channel, okay? So don't push your luck, but if it does break, that's what we've got to the upside. And coming off of the higher low, it's on my radar, at least as something to monitor over the resistance trend line. Next up, we have LYV, okay? Live Nation, I believe, LYV. Oops, LYV. There we are. Big double bottom. I'm sure you could see that before I even zoomed in. Something that looks like this, correct? Nonetheless, just like BA, sort of a flag up here at the highs, respectable pullback, 2-day highs, equal highs in here. If it gets broken, we're looking for rotation up higher to the neckline of the double bottom, which is closer to 125, 126. So a long trade idea here inside of Live Nation. That's really all I've got for you in today's video. If you did make it all the way to the end, I appreciate you more than you imagine, just because I know today's video was probably not fun to watch. It probably felt like a rant. It probably felt like, oh, this guy has no idea what he's talking about. But if you've made it all the way, I'm sure you have some sort of appreciation for knowing when to push it and when not to push it in the marketplace. And as of right now, I'm feeling like it's not necessarily the time to be overly aggressive in one direction or another. So if you're feeling the same way, if you've made it to the end of the video, let me know by giving me your thoughts on, is it time to put pedal to the metal or is it time to lay off? All right, let me know in the comments section. And if you say something about pedal to the metal or some sort of analogy in terms of pushing it in the market, I'll know you made it all the way. And again, I would just really appreciate that. So that's going to wrap up the video. More of a rant today. I apologize for that. We're not going to do that too often. We haven't done it on the channel in a while, but it was time. All right, that's going to wrap it up. If you enjoyed the video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our secondary channel is linked in the description. And all of that being said, I wish you a green trading week.